I will be continuing with the conversations on Business Incorporated, but for our DSTV viewers, you see it's day 3 at the Zamfara State government there, commissioning of the renovation and rehabilitation of Block C of the JB Yakubu Secretariat complex. Our DSTV viewers can watch that, but this goes on, Business Incorporated and all our other platforms. All right, now to our first conversation. Yeah, so much happening in the oil market today, quite dramatic price movements, and we've seen global oil demand is slowing faster than expected, and electric vehicles are partly to blame. The International Energy Agency just slashed its 2025 oil demand forecast, citing economic pressures and surging EV sales. Meanwhile, Saudi Arabia is poised to flood the market with extra supply, just as a potential U.S.-Iran nuclear deal threatens to unleash even more crude to the market. Joining us now to discuss, we have Chinan Dikwal, is the Vice Chair, Africa Energy Council. He's joining me from the Abuja studio for the first time. Great to have you, Chinan.
Ladi, it's a pleasure to be here. You got a really spectacular studio. Thanks for inviting me in.
Oh, thank you. Thank you so much. And, definitely it would have been nice if you were here in Lagos, but it's also great, that you're there in Abuja. So a lot playing out. We see the IEA warning of slowing oil demand. Our EVs, electric vehicles, and they've blamed electric vehicles and economic uncertainty as the main drivers. Is that all it is, or are there other factors at play here?
Ladi, it's a very interesting one. So just for context, you're talking about the IEA, International Energy Agency. The counterpart to that is OPEC, right? Organization of Petroleum Exporting Countries. Now, these two agencies have two diverging views. OPEC is incredibly bullish on demand, going forward. IEA, I don't want to say realistic, but certainly a lot more bearish. So they have tapered it quite a lot. So 100%, they are slashing down their 2025 forecast for oil demand growth, and 2026. OPEC has kept it constant. OPEC, the report came out yesterday, 1 p.m., Lagos time yesterday. OPEC kept it at 1.3 million barrels per day for this year, demand growth, that is. And for 2026, they kept it down, I think, slightly higher, 1.4 million barrels per day. All in all, the reality of it is, Ladi, the tariff game is slowing down global consumption, global demand. And we're seeing a massive destruction in demand. That's a reality. You just mentioned something quite important there on the supply side. We're seeing two massively important things happening. One, OPEC is going to put about 411,000 barrels per day in the month of June. So oversupply and lower demand. If a deal is struck with Iran, those barrels will end up coming onto the market again, which again will oversupply the market. And don't forget, the US are building a massive inventory of crude oil. So honestly, in a short space of time, expect to see oil, I would say in the next 3-4 months, expect to see oil around the $55. I'm talking about Brent now, Brent crude, around the $55 mark.
Right. And is 40 possible?
There's nothing that we can take off the table, if I'm quite frank, because supply is one thing. So I'm talking just on a pure play supply standpoint. We're talking about roughly maybe around $55 per barrel. I would say if demand craters any further from where we are today, I know there are positive signs with regards to the tariffs, but if demand goes any lower, frankly, I would not be surprised if we get to a situation where we're looking just above $40 per barrel. And don't forget, Ladi, I'm not saying anything controversial here. Even Donald Trump, this is exactly where he thinks is comfortable enough for the U.S. economy. He's looking to get price of oil, a lot lower so he can boost demand, and taper inflation in the U.S. And that's sort of been the game plan all along. So it's very possible that we might see a situation, I would say $55, $60 per barrel in the next few months, very possible.
Right.
$40 a stretch.
Right. And even though we're seeing, consensus, right now that, we're going to see bearish sentiment, for the oil market, for most of this year, there's always that contrarian side of things. What do you think, flips the oil market bullish?
I think for the oil market to go bullish, there are a couple of things that would really need to pick up. I think the biggest jigsaw of the puzzle would be India. China is slowing down for a lot of reasons. Donald Trump has done that. I think the counterpart with everything that's moving into India, if India can really push forward from an economic standpoint, Apple has just moved into manufacturing in there, but not just that. Even from a pure play economic standpoint, if India is able to push manufacturing a lot, and that gets into the global economy, we could have a respite in there where India starts to be a real player in terms of global oil demand. So demand would go up and it can soak up a lot of the supply that we're seeing. But I think, honestly, when I look at 2025, there are very few things that I see that would give us that upside right now. And if I just bring it back, actually, to Nigeria, Laddie, don't forget, our forecast for oil price for this year is, sorry, I apologize, for our budget is $75 per barrel. $75 per barrel, that's what our budget is based on. Yesterday, in fact, today, this morning, we're talking about oil at $65 per barrel. So there's already a deficit there. So we need to start to put some realism around that. You know, Nigeria needs to really give this a very close look. If there's a downside, what does that mean for executing this budget? Should we start to think about supplementary budget? Should we start to think about, some other ideas, I'd say?
No, definitely. I've also seen, conversations about how, countries that depend heavily on, oil revenue need to start preparing for even the worst case. Maybe the worst case scenario might be a $30 oil. Like, what more can you do, at this point, knowing that you've not really put attention on other, commodity exports. You've been solely focused on oil. What else can be done, right now, or they should be doing yesterday?
Yeah, and that's exactly the point, Lani. So you make this really important point here. When we look at Nigeria and how we stand, 80% of our revenues, our foreign exchange, comes from, crude oil and crude oil sales, including natural gas and all of that. If we do not take the action right now, just given the risk of the downside, like I'm describing there, the risk that oil could actually go below $40 per barrel, this could have real consequences. I mean, last week we were talking about the debt that was just paid by Nigeria, which is really exciting. But the reality of it is all of that can be undone very, very quickly if we do not have a contingency plan. Now, just to put this out here for everyone to know, when you think about the cost of production, we in Nigeria have a very high cost of production. I mean, many numbers are put out there. On the average, I'll probably say 45, maybe $40 per barrel is our cost of production. So what that means basically is oil has to be at $40 per barrel for us to pay back all of the costs related to production. So $45 per barrel means we probably have a cushion of about $5 per barrel that we can play with, okay? So if we have such a high cost of production and oil goes to that level, we can very quickly, quite frankly, get into real financial trouble. I'd say Nigeria is very exposed, especially as our budget is based on $75 per barrel and volumes at 2 million. Don't forget that. The budget for 2025, the volume to balance that budget is $2 million, 2 million barrels per day. Today, we're only producing about 1.48. That's the latest number that came out yesterday, 1.486 million barrels per day. But our budget is based on 2.06 million barrels per day of oil for us to balance the budget with a price of $75 per barrel.
Yeah, definitely a big shortfall there when it comes to production. But, there might be some kind of silver lining, I'm hoping, in all of this with, oil prices going down, even though we know that's bad for revenue. What does that do for fuel prices in the country?
Ladi, pardon me. I can see you speaking. I think I've lost.
Yeah, can you hear me now?
I can hear you now.
Uh-huh.
I can hear you now. Perfect. Yeah.
So
now I can hear you. Yeah.
I'm talking about some kind of silver lining, in all of this. We know it's bad for revenue with oil prices going lower and projected to hit maybe $50 at some point or $55. But what does this mean for fuel prices in Nigeria?
Yeah. Correct. So that's the silver lining. So there are actually quite a few silver linings. One, exactly your point, Laddie. Silver lining is because we're fully deregulated downstream right now. If the price of crude oil goes down significantly, that means that's good news for any refineries because you're procuring crude oil at a much lower price, and ultimately that should technically translate to the pump. So we should start to see the price of PMS, coming down. If oil starts to hit $55 per barrel, $50 per barrel, that should translate to our pocket. There should be a direct correlation with that. And I'm very happy to see Dangote, even last week, he slashed the price of crude oil. I know different dynamics, of course. But Laddie, a very exciting thing actually happened last week in Nigeria. For the very first time, we had Obodo crude blend that hit the market. That was the crude blend that came out of the corn oil production of OML 150. So exciting for several reasons. One, This is an additional blend to add to the 27 different blends that Nigeria already produces. So for Cardos blend, we have Bonny Light, we have Kwaibo. This is an additional one there. So it diversifies Nigeria's offering onto the international market, which is very exciting. But even more exciting is the fact that this is done by an indigenous Nigerian player. An indigenous company is putting this huge milestone onto the market. It's very exciting. We're starting to see in Nigeria the transfer from things that used to be done by IOCs, international players, to these local players, and I think it's really, really exciting.
So I guess with the new Obodo blend, does that mean more production for us? Does that add to the production?
Absolutely. So, and that's exactly what we've just seen now in the crude oil production for April. So, in March of this year, we were 1.4 million barrels per day. In April, we just came out yesterday, we were 1.486 million barrels per day. So the Obodo production has hit the market. I think more of that will come on as we go forward, without a doubt. But certainly, yes, that boosts our local production. But the important thing is it offers a new array of crude blends that investors can choose from. And don't forget, this is sweet crude. I think the API gravity of it is about 27.6. And sulfur content 0.05 or something like that. So very low sulfur, very good gravity, really popular, very good crude. Very similar to Bonny Light, actually.
Oh, fantastic. So I guess we're getting, better and better with the grades of crude we have here. But we also have a development, the new leadership at the NNPCL, and definitely we know what was happening before now with the price wars between the Dangote refinery and the NNPCL. What are you seeing going forward?
Yeah, so this is a very interesting development. I think if you ask me, the last few, we've had this massive tension between NNPC and Dangote refinery, as it were. But honestly, I think it doesn't need to be that way. These two juggernauts can play in this space and everybody can win. I'm very happy because the new leadership is certainly taking that approach. We see them pushing both agendas, and I think that's particularly powerful. But can I make this point as well? I'll just make this real point. Lately, we have seen in the news, a lot of talk around, looking at the past leadership, a lot of focus on the past leadership and all of the things that have happened, probes here and there, which I think is really exciting for transparency. But can I make the point, we have a very tall order here in Nigeria. 2.06 million barrels per day we need to hit by end of this year, okay? And an oil price that's going down. We need to focus on these really strategic goals as opposed to start looking back and going into a game of he said, she said, and, probing here and there. I really think we need focus because what we need, and Ladi, when you look at Nigeria's revenue makeup, a lot of the crude we're producing has been encumbered by a lot of the forward oil sales. Okay, forward crude oil sale that we've done before, the crude is not ours anymore. It's literally being taken by creditors. That's the reality. So we don't even have that, and revenue is dropping. We need to up production. We should not be distracted by any pros and all of that stuff. I honestly think it's a great thing to do because we need to establish those governance frameworks. But what's very important right now is to focus on those goals and make sure that we achieve 2 million barrels per day at the end of this year, and also make sure that drilling continues in the Niger Delta.
Right. I guess for Nigeria, it's drill, baby, drill at this point, or even more.
Absolutely.
Thank you so much, Chinan Dekwa, the Vice Chair, African Energy Council. Thank you so much for coming on today, and enjoy Abuja.
Thank you. Thanks very much, Ladi. Thanks for having me.
Nice. All right, now to our next conversation. From oil, let's move to real estate. You see, Nigeria's economy is quite tough.